Welcome to Trading Nation. I'm Mike Santoli. Apple shocking Wall Street after cutting its first quarter guidance and warning about a China slowdown. The stock slumping more than 8% on Thursday, tracking for its worst day in nearly 6 years. And since hitting a record high in October, the tech giant has fallen 38% and shed more than $400 billion in market cap. So is there more rot in this stock? Joined by Matt Maley of Miller Tabak and Michael Bapis of Rockefeller Capital Management. Guys, I tell you, it was shocking and not shocking, I guess, both at the same time, considering the market was already on top of this trend. But Matt, it's been striking to me the way Apple shares kind of repriced once the stock reopened after this news last night to this area in the 140s and has mostly held there. Is there significance around this level?
I think there is. I mean, as you mentioned, it's not like we didn't get a heads up on this. Its suppliers talked about their orders being way down, and they cited China as the reason, quite a while ago. So, and the stock, as you mentioned, was already down well over 30% before this news came out. But the thing is, and the reason why I think it should hold in here, on a technical basis anyway, is that you look at its weekly chart, its weekly RSI chart. It's the most oversold it's been going all the way back to the credit crisis 10 years ago. Also, on its weekly chart, you look at its weekly, its 200-week moving average. That line has provided incredibly good support. It did so back in 2016, it did in 2013, and even back in the credit crisis of 2008-9, it only broke slightly below that line. We got right down to that level today, within a few pennies of it this morning, and it's holding that level now. So when you combine the fact that it's got a key support level and it's very oversold, I think the worst is behind it, at least over the near term, and you'll see a bit of a bounce here.
So, Michael, is the worst behind the company in terms of the fundamental news? Obviously, we're going to get a lot more, probably, earnings estimate downgrades. People are saying it looks like dead money, even though it seems like it's cheap. What are you going to need, I guess, to get the stock reviving here?
Yeah, before we move to the fundamental factors, it's got every macro factor going against it. The trade wars with China, the slowdown in the economy, which isn't even that slow. It's just growing at a slower pace. And they're also rebranding, restructuring, and reinventing what they do. I don't believe the ecosystem is dead for the Apple phone, for the Apple computer, for anything Apple related. We could be wrong on this, but if the ecosystem is alive, the fundamentals, it's trading at 11 times next year's earning, sitting on a boatload of cash. I just can't see it going much lower from here, and I think the long-term perspective is very positive, especially because they took the time now to say, hey, we're going to re-establish our numbers, and we're going to probably beat them for the next 2 to 3 quarters. We're not dead here. People are just piling on. The shorts are piling on. We're definitely long-term buyers and positive long-term 12, 18, 24 months.
Even if it turns out, as some folks are saying, that smartphones are basically where PCs were, 15, 18 years ago, and it's just a no-growth business for a while?
Yeah, look, they did have one of the first PCs in the early 80s, so they've managed to sustain it for 40 years. I think they'll reinvent, and if that is the case, which I don't believe it is the case, there's still an ecosystem out there that Apple corners most of the market for smartphones and for products.
Yeah, it's certainly on the high end anyway. Thanks, guys. Michael and Matt, we'll see how it plays out. Thank you for joining us, and thank you for watching Trading Nation. I'm Mike Santoli. We'll see you next time.